This is the leader of our resources and mining recruitment team based out of Vancouver. And Karis has been with Hayes for 3 years. She's been in specialist recruitment for 15 years. And she's going to help me out with any industry-related questions that I can't answer at the end. So we'll have you on the line for about 25 minutes to share the results of the survey, and then we'll have a few minutes at the end for any questions, or to answer any questions that you have. And you can send in any of your questions using the chat function. Send them directly to me, and then we will do our best to answer them. Just a little bit about the survey before we start. As most of you know, we produce an annual salary guide which shows typical salaries paid out across a whole selection of industries and functional areas, and we cross-reference them for level of experience, the type of companies a role might be found in as well. The salaries themselves are based on what we see every day in the roles that we fill for our clients and from the candidates that we meet. And it's really, over the last few years, become a really valuable reference tool for thousands of hiring managers across the country, and we're really proud of it, very proud of how simple it is and its user-friendliness. If you haven't received a copy of the 2015 guide yet, you can just go to hayes.ca. You can easily request a copy there, and we will sort you out. And then, in addition to the actual guide itself, we take the opportunity to survey our clients about their own hiring plans. What are they planning on doing with salary changes or increases? How are they feeling about business activity and what's their forecast? And then their general confidence in the economy. And this year we've got 4 years of data, and it'll show some interesting trends and helps interpret the job market. I think having that information really puts us into a position where we can see things that not everybody can, and that allows us to provide some really valuable advice and recommendations to our clients, which is a real value add for us. So today's webinar, as I said, is specifically about the resources and mining sector. And when we say resources, we're really largely saying forestry and mining. And we've pulled out the responses from people in those sectors, which comes to about 300 hiring managers, HR managers, and business leaders working in that industry across 14 different functional areas all across the country. So all of the statistics that we're going to share with you here are based on those respondents. So I'll just start you off with the headlines. Number one, mining employers specifically are feeling uncertain about the economy, but business activity forecasts are actually starting to trend in a positive direction, which is good news. The trend towards giving out less than 3% salary increases has come to a halt, at least for now. Recruitment seems to be evolving, and it's causing employers new sets of challenges when they're hiring. And then finally, it would appear that employers may hold at least some of the cards when it comes to addressing candidates' skill shortage, and we'll come back to we'll cover all of these points. So we'll just start with the market outlook. So looking at feelings about the economy in general, and whether people feel that the economy in 2015 is going to strengthen, weaken, or remain the same. And this is interesting, if not maybe a little bit confusing in a way, but overall it looks like there's a kind of a polarization of opinion here. So the majority of people, about 50%, believe that the economy will remain the same in 2015. That's actually a 10-point drop from the previous year, and most of that 10-point drop is being picked up by more people saying that things will actually get worse, or the economy will weaken. And that's moved from 10% of people saying that up to around 18% saying it in 2015. Then at the same time, and confusingly, you've got slightly more people thinking things are actually going to improve in 2015, moving from just under 30% up to around 33, 34% of people. I think really the best interpretation of this as to what's happening here is it's really just down to there being uncertainty in the market, and people in the mining industry, they're just not feeling very confident. I should point out too that mining and resources stood out as one of the few industries where there's still more people believing the economy would remain static than improve. Virtually every other industry or sector that we looked at had more people saying that things would improve. The biggest influencing factor obviously for any individual is what they see every day in their own business and in their own world, I suppose. So it isn't surprising really that we would get that sort of result from this sector. Then you've got other factors that are going to influence the economy in the coming year, which will have an influence on mining. Of course, you've got the US that will significantly influence the economy here, and there is good news there. You know, the US economy is looking quite robust now. It is in recovery. It's really not up for dispute anymore. And then some of the other major markets around the world are looking more confident. So that should be good news. However, the real fly in the ointment is just the price of oil and how that's affecting business confidence. The survey, and I should point this out, the survey was actually conducted when the price of a barrel of oil was still over $60. So we'll wait and see how much impact that has. In the key markets that we operate in, and we have 2 offices in Alberta, in Calgary, at Edmonton, we're not seeing a major change there in confidence or in plans yet, so we'll see what happens. How about what's happening with business activity levels? So I'll just explain this slide first of all. The shaded bars are what the expectation was for that year, and then the solid coloured lines are what's actually happened that year. And we've got a couple more slides like this to follow on from here that are designed in the same way, just so you can understand it more easily. So just over, if you look at 2015, we've got just over 50% expecting business activity levels to increase this year, and that's up from 45% that saw an actual increase in 2014. That's a major change really from what we saw from 2011 to 2013, where there was a massive shift from 70% reporting increases in activity down to a low of under 30% reporting increases. Anyway, back to today. Hopefully the trend towards more companies seeing increased activity will continue, and we'll see close to the expected percentage of companies actually increasing their business activity levels. So overall, with over 50% reporting or expecting an increase this year, it's a far more encouraging picture for the industry. Then if we look at it regionally, national average is 52%. Ontario leads the way with 61% of employers expecting business to improve this year, and that contrasts with Alberta, where only 38% of employers are feeling like that, and in BC, we've got 45% expecting things to be better in 2015. So how is all of this actually affecting hiring plans? Overall, I should say that employers in this industry seem to be doing quite a good job at predicting what's going to happen with their staff numbers. Generally speaking, we find that people are more optimistic than they should be at the start of a year, so there's always a gap between the expectation and reality, but as I said, it's quite accurate. The trend follows a somewhat similar line as the business activity. You've got the percentage of companies increasing permanent headcount. That trended downwards from 2011 to 2013, which would you expect, but then it has actually started to make a recovery in 2014, and then it's looking more positive again into 2015. So 34% of companies expecting to add to permanent staff numbers in 2015, which is up on the previous year, which was about 28%. But having said that, you've got most companies hoping to hold their perm staff numbers steady, and that's about 45% of companies. How about looking at the same thing by region? Ontario, again, feeling the most confident at 35% increasing, and Alberta and BC at exactly the same, at about 25% each expecting to increase permanent staff numbers. And if you look at temporary hiring, really this looks like things will remain the same as previous years. Vast majority of companies, 80% now saying they'll hold their temporary or contract headcount steady. Very few saying that they're going to accelerate their use of temporary or contract headcount. Just looking at particular skills that are in demand, despite the fact that the industry, and specifically mining, I should say, has gone through quite a challenging time, there are still some skill sets that are very much in demand and still very, very hard to find. And really, the majority of those tend to be the skilled trades jobs, so millwrights, HD mechanics, and electricians. The forestry industry is actually quite healthy, in contrast, I suppose, to mining, and that does tend to suck up quite a lot of the trades guys. You've got some of the more remote sites are struggling to attract experienced candidates. They're competing against each other within mining, but of course they're competing for the same people a lot of the time, with the mining industry, the oil and gas industry, as well as other forestry production companies. The challenge, of course, for the forestry companies is that they're not always able to compete and pay as much, perhaps, to some of the skilled trades positions as the mining or the oil and gas companies tend to be able to do. Although we have actually seen, and we all know this, seen some mines shut or put into care and maintenance, but there is some good news. You see some sites in development, in particular like the De Beers diamond mine in the Northwest Territories, so there is some good news there. But I think also, all things said, finding good skilled tradespeople is still a challenge for most companies, and there are certainly more jobs than good candidates out there in that category. We all know that when recruitment is difficult, it usually revolves around a couple of simple things, and that is a lack of good candidates, and then with that you get rising salaries. But we just wanted to see what else employers are actually concerned about, and we asked this question last year too, and we'll continue to ask it and see it as the trend move. But anyway, we can see this year's results compared to last year's. After the usual issues of skills shortages and salary levels being the biggest challenges, then you've got around 45 to 50% of employers starting to think about things like their own employer brand and their own company reputation. And I should say here, I'm not talking about anything negative to do with a company's reputation, more so to do with whether the candidate pool is really aware of what the company reputation actually is. And I think a challenge for employers today is just getting their voice heard amongst so much noise out there, and I don't mean just recruitment-based noise. It's really just competing with all of the noise online and through lots of different media channels every day. The amount of time it takes to fill a role is a good indicator of the pressure that the job market is under. So we've just started to ask this question, and we'll continue to track it in the future. You can see there the majority of employers saying that it's taking between 2 and 6 months to fill a role where there is a candidate shortage, and then they're saying the most difficult level of role, so not just looking at skill sets, but saying what level of role is most difficult to fill positions within, and that's for senior management level roles. And of course, those two things taken into account can have a knock-on effect in terms of the cost and in terms of productivity to the business. You know, you may be in a situation where if we cannot find somebody, or if your organization cannot find somebody for that period of time and they're looking for a senior individual, that can put a lot of pressure onto the business. Independent contractors may be needed to be brought in to cover positions, and even then you can see some projects being put on hold. Still under the heading of recruitment challenges, we asked what were the main reasons that a new hire doesn't work out, and not surprisingly the top two were a lack of skills matched to the role and then just a lack of personality fit. And although that is, I suppose, stating the obvious, we should just highlight this for a moment and say, you know, bear in mind how difficult it is to find the right candidate and how long sometimes you've got to spend looking for them. Getting the right decision at hiring time is really, really essential. And we always advise our clients to try and, as a first step, just try to articulate in as much detail as possible what is it that you're really looking for in a candidate, and then to challenge themselves as to how accurate this is. Are the things that you're listing absolutely essentials, or are they just nice to have? And then once you've got that in mind, then the next step, of course, is can you show the discipline to actually stick to that? And we always say, if a client's interviewing a candidate and they've got some doubt about that candidate, they've probably made the decision already, and there should be no doubt. And our advice would be don't hire the person, because it will cause you problems in the future. Just on this, still on the recruitment challenges, we did a separate survey last year to look at how companies were evolving their own recruitment strategies, and specifically how they're actually using social media. The short version of what we found was that most companies are very aware of the need to use social media, and they really want to increase their online profile as an employer, but the majority are not actually using social media for recruitment purposes. And I think there's still a sense of some element of reservation as to the risks around having a higher online presence. 77% of people in this survey said they were concerned with how social media could have a negative impact on people's perception of their own brand, which makes sense, because if you're using social media and kind of putting yourself out there, you are putting yourself up for criticism, and that's a common complaint. That they were concerned with how social media channels will negatively affect their own ability to recruit, which I think is interesting. So you've got, continued pressure to find particular skill sets, most companies wanting to use social media, but then a general sense of fear about how it's going to affect their brand and how it's going to affect their ability to hire. So it's a real conundrum, I think, for corporate recruiters. Okay, we'll just talk about the skill shortage, because it does cause challenges for organizations. And obviously over the last year, there's been talk in the media about it. Actually, there's talk in the media every year about the skill shortage. But I think last year, 2014, was kind of interesting because, first of all, there seemed to be agreement that there was actually a skill shortage, and then it seemed to be tabled that there wasn't, and now, more recently, the belief is there again that there is a skill shortage. So I don't know, it's quite a confusing story. But I think from our point of view, it isn't really that confusing. I think there's a clear shortage of highly skilled people in specific areas, like the areas I've just listed. And if you're an employer in mining or in forestry in Canada, really, it would be very difficult to convince you that there is not a shortage of heavy-duty mechanics, because there is. Having said that, at the same time, it's clearly very difficult to find work if you're an unskilled individual or you're coming in at an entry level into your first job. I think both sides of that coin are true, but they're very, very different situations. In any event, we asked whether Canada suffers from a skills shortage, and 59% in the resources and mining sector believe that statement to be true. We then asked whether your own industry is affected by a skills shortage, and then a very decisive 96% believing that to be the case. We asked what you think are the main reasons contributing to the skills shortage in your industry, and there seems to be two main contributors. You've got around a quarter saying that it's a lack of training and professional development, 24%, and then a very similar number, about 26%, saying it has to do with a lack of new people entering the industry. Mining and resources actually stood out against other industries that we surveyed because of the high proportion of people believing that the issue is being driven by a lack of new people joining the industry. Most sectors clearly blamed the skill shortage and just not investing enough in training and development. And I think for mining and resources, I would agree with this, and I agree that the mining industry in particular needs to do a better job at promoting the benefits of a career in mining, and in particular a career as a skilled tradesperson. We then asked what's being done in your organisation to try to address the skills shortage, and we've got here 29% are committing to and implementing training to support their current workforce, which is actually higher than a lot of other industries, so that is encouraging. And then you've got 32% saying that they're combining roles in like creating hybrid roles. I think the combining roles tactic actually can be a very good solution. It creates a lot more efficiencies if you can have one person basically doing two people's jobs. But of course then you've got to bear in mind the additional pressure that applies to that individual and the result, and what the result of that might be. But anyway, so there's a clear belief there's not enough training and development in the industry. I think a good proportion of people there, but only 29% of employers actually committing to changing that in their own organisation. And that could be a long-term thing, or a noteworthy long-term thing for mining and resources. Okay, the lack of skilled candidates obviously has an effect on organisations, and we just wanted to find out a little bit more about this and to find out specifically what effect is it actually having. So 1/3 of employers said that the skill shortage was affecting their own business activity levels, or say holding them back from growing. And then we wanted to ask specifically, how is it affecting your business activity levels, which is the graphic on the left here, the circle. And you've got the majority here saying, it's 53% saying that it's actually affecting productivity directly. As we know, the resource and mining industry revolves around two basic things. It's time and money. I suppose like lots of industries, you've got to be able to deliver the product. You've got to be able to do it within the time scale agreed, and obviously within the cost budget agreed. And when productivity is being affected, that really is a very damaging thing at a fundamental level, and it's of utmost importance. What effect is the skill shortage actually having within companies and on the existing staff? And 27% said that it's causing increased stress levels, and over 30% saying they're seeing reduced levels of office morale. So it is having an effect there. And then you've got 55% citing just general inefficiencies in their own organization as a result. I think the point here is that companies are actually trying to do more with the same people and with the same number of people. And whilst that can be quite an attractive business case, it does come with a health warning. Of course, your own plans to keep up with your expectations could be impeded by not being able to either attract the right people, or worse still, losing some of your own very valuable people. So what are employers actually doing to respond to this? Obviously, a quick and highly effective fix is the use of contract or temporary staff, and you can see there that 40% of companies are doing that. But then, a long-term and sustainable business does require development of people and promotion of staff internally, and that means having an effective succession plan. You can see here that that's right at the bottom actually of this graphic, with only 15% saying that they're using succession planning as a tactic, which makes sense in a way, as that is a far longer term solution to deal with the skill shortage. We asked then, do you actually have a succession plan in place? We've got 34% of employers saying that they do. Another interesting insight is that there's a fair proportion of employers actually believing that resolving the skill shortage is in their own hands. 37% saying the responsibility for that is actually theirs. So in other words, if companies themselves were taking maybe a longer term view and spending time bringing in entry-level people, providing professional training and development within their own organization, in time the skill shortage would alleviate. But of course, that's very easy to say, and it's hard to take a long-term view when you've got short-term pressures to have to deal with. So what effect is all of this having on salary levels? So you can see here, from 2012, there was a clear trend towards a far more conservative position. That is, more and more employers offering a less than 3% salary increase. It's moving from 33% of companies doing that in 2012 up to 70% doing that in 2014, and that all makes sense, bearing in mind what the industry's been through. Having said that, in 2015 then, that trend looks like it has actually leveled out, with a slight drop-off in the proportion of companies going with the less than 3%, and a slight uptick in companies going for more than 3%. I think the slightly better picture in business levels, along with the continued skills shortage in certain areas, I think is making that happen. But overall, it's still a fiscally responsible position, vast majority staying below the 3% mark. I think if 2015 does actually turn out to be better, and who knows what's going to happen with the oil price issue hanging over us, but if the business does improve off the back of the US recovery, we will probably see a continued move back towards the 3% mark in future years. Okay, then just looking at a provincial breakdown, Alberta here is the most confident, at least at the time of the survey. We've got 50% of employers in Alberta going at more than 3% increases, and that compares to Ontario, where we've got 40% of employers going with more than 3% increases, and 31% of employers planning on doing the same in BC. So outside of specific skill sets driving salary growth, how about level of seniority? So we asked respondents to answer where they were feeling wage pressure, and the area that there's the most wage pressure is at the mid-level to senior management level. Around 65 to 70% of employers saying they're seeing that. And then at the junior end, not so much, around 30% of employers saying there's wage pressure at the junior end of the market. You've got about 39%, almost 40%, saying their company doesn't offer competitive salaries or pay at the market rate. Not a lot of people think that their company is paying over the market rate. And then 39% again saying the number one reason that a candidate turned down a job offer was because the salary was too low. So just to summarize here on compensation, we've got most employers holding steady with a less than 3% salary increase for 2015. A slight move back in favour of more than 3%. 65% of companies saying they're feeling some kind of wage pressure at the management level. Around 40% feeling sensitive about the salaries that they offer and what they offer to new employees. Okay, so just looking at benefits then, we asked which benefits have the biggest influence or are the biggest influencing factors on recruitment and retention. And vacation, there you can see tops the chart of benefits, and I'm just going to come back to that in a moment. But career progression, if you can call career progression a benefit, but I suppose it's not compensation, so it's a good thing to put in here and see how important it is. That comes in at second place. But as I just said, only 35–36% of companies actually have a succession plan in place in resources and mining. I think that's a big opportunity for employers, and it's a big opportunity because it has a real effect, but it doesn't cost anything. You know, think about how impactful it would be to be able to actually show people in the organization, here's the succession plan, this is what it means to you personally. In 5 years' time, potentially you could be at this level, and to be at that level in 5 years' time, here's where we need to have you in 12 months from now. And that really does have a big impact on your ability to hold on to people and how motivated they are on a day-to-day basis. So, as I said, in going back to vacation, that would appear to be the most influential benefit on recruitment and retention. People really value their vacation time. But then separate to this question here, we asked, what were you planning on improving? Which benefits were you going to improve? And the most popular one to look at to make a significant improvement was actually flexible work options. So things like flexible work hours or ability to work from home. But you can actually see there that flexible work options comes in far lower, a lower rank on the pecking order there on the influencing factors. So just an interesting point here to make is that despite the fact that vacation is such a big factor for employees, only 16% of employers are actually giving a significant change and vacation time consideration. So again, it could be a big opportunity for you, and it could be a good way of gaining a competitive advantage when you're hiring people. Okay, so I think that's pretty much it. I'm just going to finish with, I'll just summarize the key findings and leave you with a couple of recommendations, and then we can check to see do you have any questions to answer. So number one, mining companies, they are feeling uncertain about the economy in general, but business levels have taken a step back in the right direction, which is good news. You've got about 30% of companies now adding to their perm staff numbers, which is good news. Skill shortage in specific areas is still clearly present, and that will only be set to accelerate, and that is having an effect on existing staff and worth bearing in mind. There's an increase in the percentage of employers offering more than 3% for the first time in 3 years. But having said that, the majority of employers are still continuing to increase salaries by less than 3% annually. And then finally, most employers would appear to be taking, not all employers, but most would appear to be taking a short-term view on trying to solve the skills shortage within their own business. Okay, and then just a few recommendations. Number one, it's important to try and build a talent pool, not really just for today, but tomorrow, and you've got to do that through long-term succession planning. As I said, has a huge impact and doesn't cost anything. And secondly, consider using temporary contract staff to alleviate the pressure on the current workforce and avoid losing good people, and to try and support the growth plans without committing to a fixed cost. start selling your own employer brand. You know, think about, why would someone want to work in my organization? How do we articulate that? And then how do we get that message out there? And becoming familiar with digital tools and online tools to get that message out there is starting to become very, very important. When it comes to salaries, you know, you've got to remain competitive, but you know, salary doesn't necessarily just have to be the base salary. It could be things like performance-related bonuses and incentives, and our research would suggest, and our experience would suggest, people are willing to take some risk on their base salary if there's some upside on a performance-related bonus, and that could be a win-win for the employer and the employee. And finally, you know, think about the workforce on its potential, and really seriously consider not just a succession plan, but offering training and development and trying to upskill the junior to mid-level guys, because there will be a skill shortage in 2 or 3 years from now, and you will have people with 2 or 3 years good experience. Okay, so that is the end of the key messages that we wanted to share with you. So thank you very much for dialing in and listening. I think we stuck to the time, and again, apologies for the late start. We're still not sure what exactly happened there. But while we're waiting to see if we have any questions, if you have not got a copy of the salary guide, you can go to hayes.ca/salary guide, and we will get a copy to you post-haste. And if you have any questions directly for me, you can email me there. That's my email address, rowan.o'grady@hayes.com. As I said at the start, we have Keris Hugarty on the line as well to answer any tricky questions. Keris manages our team out in Vancouver, who specialise in recruiting for the resources and mining sector. So let's see what we get. Okay, we've got the standard question that we always get: when or how can we get hold of the slides from the presentation? So we've recorded the seminar or the webinar, and we'll post that on our channel on YouTube. So you know, if you're particularly interested or you can't find it, just drop us an email and we'll direct you to the link so you can have a look, and you can actually turn off the audio. We'll probably cut out the first 5 minutes of silence, but then you can turn off the audio so you don't have to listen to me, and you can just look at the slides directly. What else? The other ones. Why are employers becoming more concerned about their employer brand? I don't think they're becoming concerned about the fact that they have a bad brand. I think the point here is just starting to think about why or how do you raise your profile when there's just so much noise through digital media all of the time. You know, can you get your message out? You're competing with lots of other companies in your industry, competing for some candidates with lots of different industries. So being able to try and raise your own employer profile, and not just when you're hiring, that's something that you'd have to do over a period of time. That is a challenge for companies, and it comes down to, you know, experience or expertise within doing that, and it comes down to the resources. You know, if you've only got one recruiter, how can they try and work on the current jobs that you have, but also work on medium to long-term stuff like raising your employer brand? So, yeah, I think it is an issue, but it's certainly nothing to do with a company having a bad brand. I wouldn't suggest that. Let's see, what else? Outside of salary, what are employers trying to do to attract candidates? Well, I might give that one to Keris, actually. So, Keris, if you're on the line, what are you seeing employers doing outside of just offering base salaries to candidates within the industry?
I think obviously salary is a big part of it, and certain individuals working certain roles are more attracted by salaries than other parts of the package, and obviously the incentives and financial rewards are important. But I think what we've seen other companies do is to start to really, because we're obviously dealing quite a number of times here with remote and rural locations where quite often you're having to relocate individuals. We're seeing a lot of companies look to what they can provide in terms of a relocation package, or also, you know, providing incentives to enable individuals to purchase property at the location where they're moving to, for example. Alongside that, providing a lot of information about the local community, what the resources are, what's available to people moving to the communities, so that they're able to get a really good match with regards to what the employer and their families are looking for when they're moving. So part of the relocation piece, I think, is incredibly important.
Yeah, and in particular, probably that's an area that you'd focus on because that's where the demand is right now. But I suppose when the industry recovers, then we have to look at what companies are doing to attract candidates, maybe when they're not having to relocate or not having to go to remote industry or remote locations. So we'll see what happens. There's a question: how does hiring plans for mining professionals stack up against other professions or skill sets? It's more conservative. I think it was it's like about 7 points lower than the national average, with companies, as in companies looking to add to their permanent headcount. So it's probably less positive than most of the other ones. Having said that, it's improved a little bit recently, so we'll wait and see what happens. And obviously, as everybody knows, it all depends on what happens with the world economy and commodity prices, so we'll see how it goes. But right now, not as good, but slightly better than the previous couple of years. It's really the easiest way of answering that. Okay, good. Let's see if any other questions. No, we do not. So that is it. Thank you very, very much for dialing in. I hope you found it useful. If we can help you with anything, just drop me an email directly and we'll be in touch. But otherwise, thank you for everybody who contributed to the survey and completed the questionnaire, and thank you to everybody who put together the report here at Hayes and contributed to getting the presentation ready. That's it, and all the best for 2015.